Hey guys, this is Tyler from DPM Trading. So I wanted to make this video today because, well, for a couple reasons. So I didn't take any trades today, and I want to show you why. So this is partly going to be a strategy video, and then partly going to be a little bit of a trade psychology video as well, because psychology played a lot into why I didn't take any trades today. Sorry, I just want to adjust that light a little bit. So I'm going to show my screen in a second. We're going to go through the day. It's not replay because today's still active, but I'll show you exactly kind of what I was looking at and why I did not take any trades, because I think that's super important. I'm also going to show you the perfect setup that did occur. It was after my trading hours. I was on a Zoom call with one of my coaching clients, and so I did not take this trade, but it was, in my opinion, a pretty picture-perfect trade setup. And so I'll show that to you because, to me, this is an A-plus trade. And if you can learn this type of strategy, this is where it's at. So cut over to my screen share.
Okay, so here we go. This is the micro ES futures, which is what I'm currently trading. And this is the March contract, which this is rollover week, and usually I wait a little bit to roll over. So this morning and yesterday, I was on the March contract, and I did not trade yesterday either. Yesterday, if you're not watching this video, well, probably by the time I get this uploaded, yesterday was the Monday, and on Friday, this past Friday, is when the SVB bank collapse happened. And then yesterday, the Fed was in a closed door meeting. And price action looked really weird to me, and volume was really low, and I decided to stay out of the market because I kind of figured if they came out of that meeting and made any announcements, the market could go crazy. But the price action looked weird. And the same thing happened this morning. So let's take a look at this really quick. So this is, I use three main charts, kind of four. This is the 25,000 tick chart. And so going into today, you know, price right here was the overnight open, and price had already started rallying. We had CPI news come out, so you had this big candle. Let's go down. Actually, what I'm going to do really quick first is just throw in a little bit of this resistance area, because this will be important later. So just throw that in for you. And also, there's this kind of support brewing all through here, which is somewhat important as well. Something like that to be aware of. Okay. Okay, so now we have, you know, at the open, price was kind of right around here. Let's go down. This is my 5,000 tick chart. So this 25,000 tick chart, for those that don't follow me regularly, prints kind of like between an hourly and a 15-minute, depending on what session we're in. Okay, so this is the day on the 5,000 tick chart, and 5,000 tick chart usually during the overnight session kind of prints like a 15. During the cash open, prints like anywhere from like a 1 to 3 minute. And so this is where we opened this vertical line, and price kind of came up here, and you know, price action was just slow. Like these candles are printing. This is 933, 940. So every 7 minutes, like that's crazy slow. So I was totally just sitting on my hands throughout all of this. And I kind of had this zone marked off, you know, a little bit something like this as my kind of support zone. And so I figured that price might pop up and we might retest this area and look for a bullish push to here. But these candles were huge and price was acting weird. And I was like, man, like when this actually happened, it just wasn't, I don't like taking setups off a lower time frame. So it kind of was outside my rules and I got really uncomfortable with it. And then what happened was I realized, somebody in my Discord group pointed out, that there was already more volume on the June contract. And that's why this volume was so low. So that was kind of my mistake. So I'm going to switch over to the June contract and show you what it looks like there. Okay, so this is my June contract, same deal. This is the open, and what we're going to do is we're going to pop that support and resistance area right back in here. Okay, so I had this kind of marked off from these high areas yesterday. And now we can see that we got a much more normal looking pullback and retest here. And this was sort of my my area that I would have been interested in buying. And if you follow my trading, my other videos, you will see that this would have given us a really easy entry. Would have bought off the top of that little structure point there. First target, 1-to-1 risk reward, would have hit that. Probably would have taken out a runner at break even, but that's okay. But that would have been a nice little entry there. So first point here is that I didn't know I was on the wrong contract, but I knew the chart didn't look the way it normally looks to me. And because of that, even though price came to the area I was interested in, I didn't take a trade. Now, am I a little bit disappointed that I missed this trade because I was on the wrong contract? Like, sure I am. Absolutely, sure I am. Because, you know, this was a great point to buy. I mean, price really moved up nicely from there. That would have worked out really well. But at the end of the day, it's having the discipline to just know that something doesn't feel right here. Now, it was about this time of day when I realized I was on the wrong contract. And what happens when you switch contracts on a platform like NinjaTrader is sometimes your drawings don't line up. So all my drawings were done on the March contract, and on June, the levels were slightly different. So I got a little distracted messing with my drawings and trying to get them lined up. And I had an additional, my target, by the way, my overall target, if the runner didn't get stopped out here, was, again, based on the resistance that was basically up here. You know, so we had this high here and this high here. Okay, so this was my target area because of these highs. And that's what I had drawn. I actually had it more as a zone from all these wicks. So something like that, okay? That might not have been exactly it, but it was pretty close to that because my target, I think what I called out on my runner was 68, and that got tapped right there. So that's pretty close. I wanted to get out before we hit this resistance. So I'm adjusting my drawings, getting everything lined back up, and then I realized we had this not super perfect, but kind of momentum setup right here, where you had this strong bull push and then slight consolidation straight over. If you've watched my momentum video, I buy off the top of those, stop underneath. I go for a 1-to-1 target that would have hit. Now, I had an order there and I canceled it last minute. Why did I cancel? This is the psychology piece of it. This trade worked, but I canceled it for two reasons. One, I wasn't prepared for this. I was distracted. And then I kind of noticed this trade. And I was like, ooh, I better get an order in here. So it felt impulsive. And whether it's a good setup or not, trading impulsively is a bad habit. And so I had the order in there and I was already feeling anxiety where I was like, oh, is it going to trigger? I don't know if I want to be in this trade. And the moment I recognized that set of emotions in myself, I canceled the order. Because to me, if I got in that trade and it didn't work, I would have been kicking myself. And so much of successful trading is trusting yourself. And how can I trust myself if I allow myself to take impulsive trades like that? So I canceled that order. The other thing about it was I had just posted in the Discord group that I wasn't interested in going long here. Why was I not interested in going long here? Well, on my 25,000 tick chart, you can see that we're starting to approach, like you could call this, for instance, a supply area. You know, we're approaching this resistance. Price is already very extended to the upside. I normally don't look for buys in this kind of an area. If anything, I'm looking for short reversals. And I had just typed that in the Discord group. So for me to then enter a buy order means impulsively I did something that when I was taking my time and thinking, I was taking an opposite stance on it. So again, I canceled that order. You know, if you look at this setup on the 1,000 tick, this is it right here. Look at this tight sideways consolidation. That's actually like a picture perfect, you know, for buying off it. That's the kind of breakout you want to take. But this wasn't an ideal setup for me. There's one other thing that made it not ideal was that I would have liked this to set up after a kind of a consolidation lower and then get this choppiness, little momentum, and then break up. But when it's already broken out from this consolidation, sometimes these are head fakes. So this wasn't to me an A+ setup. So even though it worked, I did the right thing by not taking it. And that's something you really have to get used to, because we always have to remember that even low probability trades work sometimes. So just because a trade worked does not mean you should have been in it. A trade that only has a 10% chance of success still wins 1 out of every 10 times. That doesn't mean you should have been in the winner, because there was a higher probability you would lost. So to me, everything about this trade made it low probability. The higher time frame location, the fact that it was after this breakout, it was a low probability trade to me. And it did work, but it worked slowly, not the way we want a momentum trade to work. Okay, now here's what I promised. This is the ideal setup. I had this resistance area drawn, okay? And my target was just underneath it. So at this point, price being extended, I'm more interested in going short. And I'd be interested in taking a short back down to the previous highs, which would be this area here. This is again, the 25,000 tick chart. It's my higher time frame. So this would be a good target for a runner for me. Will be right around here. Maybe we'll call it like 4150. Okay. So here's 5,000 tick chart. We come up, we hit some resistance, we pull back, we make another high, we chop around. Now on this chart, this is later in the day. This is outside of my trading hours. So this chart starts to move slow. So it's not going to show up well on the 5,000 tick. But I want you to look at this this is the 1,000 tick. This also looked almost identical on the 1 minute chart. Okay. Resistance becomes support. Okay, this is picture perfect. We have higher time frame resistance area. Okay, this is the zone that we're looking at right here. So the resistance off this higher time frame, price comes up into it, hits some resistance, gets above it, forms some support, and then breaks down back below. A retest of that same level is such a picture perfect entry. Like, it's so beautiful. And there's so many ways you could have taken this. You could have just taken this break of structure. That would have been my entry right there. Okay. But look what price did after this. It just dropped. This is the runner target. Remember I said 4150. So right to that. Now again, my runner may have gotten stopped break even. How I would trail my runners if they don't get taken out break even is I trail on the 5,000 tick chart structure points. So I would have been trailing this high, maybe that wick right there, maybe this consolidation, but even trailing this down, it would have been safe all the way down to that lower target. And look, it kept even going. And then look, again, this support area, we broke below and becomes resistance. So this here, though, this is an A+ trade. This is a perfect setup. When you get this resistance and then becoming support as price is going into a higher time frame resistance area and then breaking down and then just retesting that same level, man, that was a beauty. Unfortunately, this happened at noon. I usually stop trading at 11. I take coaching clients after 11 o'clock until my kids get out of school. And so I was not in this trade, but man, what a beauty. So yeah, basically, main thing about this video is, like, you know, I didn't trade yesterday. I didn't trade today. I should have been on the June contract. I didn't know that. Usually I wait to roll. I think volume switched a little earlier this month. I don't know if it was because of the banking news or if it was because of the clock change, because that was Sunday. I don't know. But what I do know is that I recognized that price wasn't behaving the way I normally expect it to. And I had the discipline to stay out of that, because had I tried to trade off my normal charts before I switched the contract, I would have gotten chopped up, guys. I'm telling you, or I would have had to take more risk than I wanted to because the candles were printing larger than they normally do. It would not have been good. So I'm disappointed that I missed the trades, but I'm very happy with myself for having the discipline to know, hey, something isn't right here, and you shouldn't be deploying your capital and putting it at risk. That being said, there was this picture perfect trade set up later in the day, so I figured take advantage of this video to show you guys that as well, because I'm telling you, man, these trades like this, you see these are the trades you want to get in each day if you're trying to get those runners, those bigger moves, man. That's just beautiful. It's absolutely beautiful. So thanks, guys. I hope you enjoyed this video. I hope it was helpful. Mindset, trusting yourself is so important. And that's what this morning was all about for me. It was just saying, hey, if I don't play this right, I'm going to erode my trust in myself. Whether or not that trade would have won, it would have been going against my rules, and that's going to take away from my trust in myself. All right, guys, have a great rest of the week.